Hey everyone, in this video I'm going to bring you one artificial intelligence AI stock that's down 80% off its high that I think is a buy going into 2024. Now, I know artificial intelligence has been extremely popular in 2023 and you might be thinking that the trend is overhyped. While I will agree with you that the trend is hyped up significantly, the amount of spending that artificial intelligence is going to generate is expected to exceed $1 trillion by 2030. And that's going to be up from the $200 billion in 2023. So we're seeing real money come into this trend. We're seeing real money being spent for artificial intelligence because of what it offers, the improvements in productivity and cost savings and the revenue generating capabilities. So while it is a trend that is not a secret, it's still got room to run in my opinion. So let's check out this AI stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the AI stock that I'm going to be talking about in this video that's down 80% is Snap. Now, Snap is a social media platform that brings together users and allows users to create content and make posts and communicate with each other. And if you know my channel, then you know I like this business model. Snap gets to make money when other people engage on the platform, act just be active on the platform, and Snapchat makes money, right? The more engagement, the more money it makes. It doesn't need to spend money to create any kind of product or service. It just enables the platform, keeps it up and running, updates it, and makes it fast and zippy and keeps it up, and people go on the platform and they engage. How many people? 406 million daily active users as of the latest update. That was an increase of 43 million year over year, 12%. So they added 43 million new daily active users on the platform. The total time spent watching Spotlight increased by 200%. And since launching an AI-powered chatbot, over 200 million people have sent over 20 billion messages. And they've launched a new generative AI power feature called Dreams, which enables Snapchatters to create generative AI selfies. But the most important thing with AI that I like with social media companies is using AI to recommend content to users that keeps them engaged. Using artificial intelligence, Snapchat can determine what content the users are most likely to engage with and thereby increase time engaged on the platform. So instead of spending 8 minutes on the platform, you might spend 11 minutes on the platform. And those extra 3 minutes are huge for Snap because those are opportunities to show you more advertisements. And by the way, did I mention that the industry that it operates in, the total addressable market, is expected to exceed $900 billion in 2024. So it's got a massive market opportunity ahead. These are all things that I appreciate when I'm looking at an investment. Already, Snap has demonstrated considerable revenue growth, increasing its revenue up to 4.545 billion in the trailing 12 months. Let me make it so that you can see that. And growing from less than 600 million in 2017. More importantly, Snap has used that revenue growth to become cash flow positive. Since 2022, Snap has been generating cash flow from operations over a trailing 12-month period in excess of 200 million per year, 207 million in the most recent trailing 12-month period. So it is now self-funding, even though the business is still growing significantly. I showed you it added 40 million new users year over year. It's funding itself, it's self-sustaining, doesn't need to go back to investors and ask for any more money. Additionally, the company faced some difficulty in 2022. That's most of the reason why the stock price is down 80% off its high. Notably, the most difficult challenge it faced was when Apple changed its privacy policy that made it harder for Snap to collect data on the users and to sell targeted ads. And so that caused some difficulty in the business. Revenue growth slowed down, profitability slowed down. And so Snap made some changes and it made some cost cuts. And you're seeing that here with the total employee count. For years, it was growing by the thousands, and it finally said, enough is enough. We're going to get back down to our core, and management admitted this and said, we're not going to do all these other things. We're going to focus on the core of the business, and we're going to shrink our employee base. And that's likely to boost profitability when the company returns to growth, which it is expected to do next year and the year after that. Let me show you the expectations. So investors, the consensus estimate among analysts is for Snap to increase revenue by 13.1% in 2024, but for its earnings per share to grow by 135%. Similarly, in 2025, revenue expected to grow by 15.7% and earnings per share to grow by 121%. So earnings per share is likely to 5x from the 6 cents per share in 2023 up to 15 cents in 2024 and up to 32 cents in 2025. That's a 5x increase in earnings per share, partly due to the cost-cutting measures the company took in 2022 and early 2023 to streamline the business. And now when revenue grows in double digits, its earnings per share are going to grow by multiples of that magnitude. And so Snap has what I call an economies of scale. Economies in scale is one of the most desirable characteristics you can find in an investment. In the example I have created here, sales grow from $100 in year 1 to $115.76 in year 4, while net income more than doubles from $4.50 to $9.47 in year 4. This company demonstrates economies in scale. As its revenue grows, its profits grow by a larger magnitude. Not every company can achieve this kind of effective growth. Here's how it works. This is a typical categorization of an income statement of a publicly traded company. Cost of goods sold is what's called a variable expense. That means cost of goods sold is connected to sales. Other expenses like interest, general and admin, and depreciation are not connected to sales. You can see here depreciation stays the same at 25 whether sales increase or not. The same is true for interest expense. It stays the same whether sales grows or not. You can understand your interest payments do not increase when your sales increase. Overall, businesses typically have a mixture of fixed expenses that are unrelated to sales and variable expenses that are. When sales increase, the business leverages those fixed expenses, as we see in this example, and profits grow by a larger magnitude than the increase in sales. That being said, you can see it demonstrated here again in its operating profit margin, which has increased from negative 100% in 2019 all the way up to negative 31.63% in the most recent trailing 12-month period. This is good news for investors as it demonstrates it can grow profits faster than it can grow revenue. And given that it's operating in this massive market opportunity, that's really positive for investors. The next thing I wanted to look at is its balance sheet. I want to see if long-term debt or cash is a problem, and that's not the case here for Snap. It has $3.7 billion in long-term debt and $3.6 billion in cash. So about the same amount of debt and cash. And it also has been generating hundreds of millions of cash flow from operations each year. So this is not an issue now that it's generating cash flow from operations, and the total long-term debt is not so high as to be a problem. In fact, it could use its cash to just almost extinguish its debt completely if it chose to. Finally, I wanted to look at valuation, and Snap is trading at a forward price to sales of 5.228, which is relatively expensive. Even though the stock price is down by 80%, the valuation is not cheap still. However, this is one stock where I am willing to pay the premium price. You've seen me say so many times that some stocks are too expensive and I don't want to pay that price. For Snap, this is one where I would be willing to pay that premium price because of the characteristics of the business, the economies in scale, the demonstration of a cash flow positive business model, the lucrative total addressable market opportunity in excess of 900 billion, and the fact that Snap makes money off of its users just creating content and engaging with the platform. Almost zero cost of goods sold for Snap, right? It doesn't have to pay users to create that content. For all those reasons, those attractive characteristics, I'm willing to pay this premium, and I would say yes, Snap stock is a buy going into 2024. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.